Financial Regulations, Chapters 3 to 5, 100 Exam Questions and Answers Audio Guide, Civil Service Success Pack. Copyright Notice, Nigerian Civil Service Exam Success. All rights reserved. No part of this material may be reproduced, distributed, or transmitted in any form without prior permission. This guide is strictly for educational and exam preparation purposes. Introduction. Welcome. You are about to go through 100 Financial Regulations Q&A, Chapters 3 to 5, a focused audio guide designed to help you pass your civil service exam faster and with confidence. This session will walk you through the most important questions and answers, covering key areas like expenditure control, warrants, virement, and financial responsibility. Listen actively, repeat mentally, and allow the concepts to stick. By the end of this guide, you will not only understand the rules, you will remember them when it matters most. Before we dive in, quick one. If you're serious about passing financial regulations without stress, make sure you check the full package covering chapters 1 to 5. It includes a complete ebook and audio guide designed to help you understand faster, remember longer, and avoid costly exam mistakes. The link is right there in the description and pinned comment. Now, let's get started. 1. The Annual Appropriation Act is primarily used to A. Increase government revenue. B. Limit and arrange government expenditure. C. Approve audit reports. D. Control tax rates. Correct answer. B. It is the instrument used to limit and arrange the disbursement of federal government funds. 2. No expenditure shall be incurred without A. Auditor General approval. B. National Assembly resolution. C. Minister of Finance approval through warrants or AIE. D. Accountant General signature. Correct answer. C. Expenditure must be authorized through a warrant or authority to incur expenditure issued by the Minister of Finance. 3. An officer who incurs expenditure without authority. A. Will be pardoned. B. Will be promoted. C. Will be warned. D. Will be personally liable. Correct answer. D. The officer becomes pecuniarily responsible for unauthorized expenditure. 4. Recurrent expenditure is paid from A. Development fund. B. Special account. C. Consolidated revenue fund. D. Contingency fund. Correct answer. C. All recurrent expenditure is charged to the Consolidated Revenue Fund. 5. Without a valid warrant or AIE, the Accountant General will A. Approve expenditure. B. Ignore the transaction. C. Accept partial charge. D. Reject the charge. Correct answer. D. The Accountant General will not accept any charge without proper authority. 6. Which of the following is not a form of warrant? A. Provisional General Warrant. B. Virement Warrant. C. Revenue Collection Warrant. D. Contingency Warrant. Correct answer. C. Revenue Collection Warrant is not listed among the recognized warrants. 7. A Provisional General Warrant is issued when A. Budget is overspent. B. Appropriation Act is not yet in operation. C. Audit fails. D. Revenue falls. Correct answer. B. It is issued when the Appropriation Act has not commenced at the beginning of the financial year. 8. The maximum duration of a Provisional General Warrant is A. 3 months. B. 12 months. C. 9 months. D. 6 months. Correct answer. D. It is valid for a maximum of 6 months only. 9. Spending under a Provisional General Warrant must not exceed A. Future estimates. B. National Assembly approval. C. Previous year level. D. Minister's discretion. Correct answer. C. It must not exceed the level of services of the previous financial year. 10. The General Warrant authorizes A. Revenue generation. B. Audit inspection. C. Borrowing. D. Release of funds for approved expenditure. Correct answer. D. It allows the Accountant General to release funds for approved services. 11. The Minister of Finance may exclude items from A. Budget speech. B. General warrant. C. Audit report. D. Treasury circular. Correct answer. B. Certain items may be excluded for control purposes. 12. A supplementary general warrant is used for A. Reducing expenditure. B. Emergency borrowing. C. Additional approved expenditure. D. Revenue adjustment. Correct answer. C. It covers additional expenditure approved in supplementary appropriation. 13. A supplementary contingency warrant is issued when A. Budget surplus exists. B. Virement is possible. C. There is no urgency. D. Urgent expenditure cannot wait. Correct answer. D. It is used in urgent situations where delay will harm public interest. 14. Contingency warrant transfers funds from A. CRF to Development Fund. B. Contingency Fund to CRF. C. Special Fund to CRF. D. CRF to Special Account. Correct answer. B. It moves funds from the Contingency Fund to the Consolidated Revenue Fund. 15. Expenditure cannot be charged directly to A. Consolidated Revenue Fund. B. Development Fund. C. Contingency Fund. D. Special Account. Correct answer. C. Direct charge to Contingency Fund is prohibited. 16. Expenditure from Contingency Fund becomes valid only after A. Auditor approval. B. Minister approval. C. Accountant General approval. D. National Assembly approval. Correct answer. D. It must be included in a Supplementary Appropriation Act. 17. Replenishment of Contingency Fund is done through A. Virement warrant. B. Supplementary General warrant. C. General warrant. D. Development warrant. Correct answer. B. Supplementary General warrant is used to replenish the fund. 18. Virement refers to A. Borrowing funds. B. Increasing revenue. C. Transfer between line items. D. Reducing expenditure. Correct answer. C. It is the transfer of funds between line items within the same head. 19. Virement requires approval from A. Auditor General. B. Accountant General. C. Minister of Finance. D. National Assembly. Correct answer. D. It must be approved by the National Assembly. 20. Virement cannot be used to A. Adjust expenditure. B. Transfer funds. C. Create new line items. D. Balance accounts. Correct answer. C. It cannot be used to create new line items. 21. Virement cannot be applied to A. Savings. B. Overhead votes. C. Audit queries. D. Personnel costs. Correct answer. C. It cannot be used to correct audit queries. 22. Variation in establishments requires approval from A. Only Minister of Finance. B. Only Auditor General. C. Minister, Head of Service and Salaries Commission. D. Accountant General only. Correct answer. C. It requires multi-agency approval. 23. Supplementary Statutory Expenditure Warrant applies to A. Capital projects. B. Statutory expenditures. C. Revenue collection. D. Audit expenses. Correct answer. B. It applies to constitutionally chargeable expenditures. 24. Expenditure must not exceed A. Estimated revenue, B. Previous year budget, C. Auditor's recommendation, D. Approved provision. Correct answer D. Spending must not exceed approved budget provisions. 25. Payment for a project not included in current budget requires A. Virement, B. Internal memo, C. Supplementary provision, D. Audit clearance. Correct answer C. A supplementary provision must be applied for. 26. Unspent recurrent expenditure votes at the end of the financial year shall A. Be transferred to capital votes, B. Be carried forward automatically, C. Be shared among departments, D. Lapse. Correct answer D. Recurrent votes expire at the end of the financial year and cannot be carried forward. 27. Applications for supplementary provision are submitted using A. Form 12, B. General Form 57, C. Treasury Form 8, D. Audit Form 21. Correct answer B. General Form 57 is the official form used for supplementary provision requests. 28. Copies of supplementary provision applications must be sent to A. Only Accountant General, B. Only Auditor General, C. Accountant General and Auditor General, D. National Assembly only. Correct answer C. Both Accountant General and Auditor General must receive copies. 29. Applications involving personnel matters must also be sent to A. Budget Office, B. Presidency, C. Ministry of Finance, D. Office of the Head of Service. Correct answer D. Personnel-related matters require submission to the Head of Service. 30. The Minister in charge of budget decides whether A. Audit is conducted, B. Application is justified, C. Salaries are paid, D. Revenue is collected. Correct answer B. The Minister determines if the request is justified and in public interest. 31. Virement applications on establishment matters must be submitted not later than A. End of the year, B. 6th month, C. 1st quarter, D. 9th month. Correct answer C. Applications must be made within the 1st quarter of the financial year. 32. Final approval for virement applications must be obtained not later than A. 5th month, B. 10th month, C. 12th month, D. 2nd quarter. Correct answer B. The 10th month is the final deadline for approval. 33. Virement from recurrent expenditure to capital expenditure is A. Allowed with approval, B. Encouraged, C. Automatic, D. Prohibited. Correct answer D. Movement from recurrent to capital votes is not allowed. 34. Approved virement details must be forwarded within A. 2 weeks, B. 6 months, C. 1 month, D. 3 months. Correct answer C. Details must be forwarded within 1 month. 35. Officers controlling votes must ensure that A. Revenue exceeds expenditure, B. Expenditure exceeds allocation, C. Balance is ignored, D. Reduced balance is not exceeded after virement. Correct answer D. They must not exceed the adjusted reduced balance after virement. 36. Capital expenditure is paid from A. Consolidated Revenue Fund, B. Special Account, C. Development Fund, D. Contingency Fund. Correct answer C. Capital expenditure is charged to the Development Fund. 37. Capital expenditure requires authorization by A. Auditor General, B. Minister of Finance, C. Budget Office, D. Head of Service. Correct answer B. Only the Minister of Finance can authorize through warrant. 38. Provisional Development Fund General Warrant is issued by A. Accountant General, B. Auditor General, C. Minister of Finance, D. President. Correct answer D. It is issued by the President when capital appropriation is not in force. 39. Provisional Development Fund warrant duration must not exceed A. 3 months, B. 12 months, C. 6 months, D. 9 months. Correct answer C. Maximum period allowed is 6 months. 40. Development Fund General Warrant is issued after A. Audit approval, B. Budget discussion, C. Minister's discretion, D. National Assembly approval and presidential assent. Correct answer D. It follows legislative approval and presidential assent. 41. Development Fund Supplementary General Warrant is used for A. Revenue collection, B. Personnel cost, C. Additional capital expenditure, D. Audit correction. Correct answer C. It covers additional capital projects approved by National Assembly. 42. Capital Supplementation Warrant is used to A. Reduce project cost, B. Delay projects, C. Cancel projects, D. Accelerate funding for projects. Correct answer D. It is used to speed up project funding. 43. Total expenditure under capital supplementation must not exceed A. Budget allocation, B. Estimated total project cost, C. Previous year spending, D. Auditor limit. Correct answer B. It must not exceed total project cost. 44. Capital supplementation expenditure must be reported to A. Auditor General, B. Accountant General, C. National Assembly, D. Ministry of Finance. Correct answer C. All such expenditures must be reported to the National Assembly. 45. Development Fund Special Warrant is issued in A. Normal conditions, B. Budget surplus, C. Routine expenditure, D. Urgent situations. Correct answer D. It is issued when urgent expenditure cannot be delayed. 46. Development Fund Special Warrant is authorized by A. Accountant General, B. Federal Executive Council, C. Auditor General, D. Budget Office. Correct answer B. FEC authorizes the issuance of this warrant. 47. Development Fund Special Warrant must not exceed A. Total budget, B. Project cost, C. Available development fund balance, D. Revenue level. Correct answer C. It must not exceed the remaining development fund balance. 48. Development Fund Virement Warrant allows A. Creation of new project, B. Policy change, C. Transfer within capital projects, D. Audit adjustment. Correct answer C. It allows transfer between capital projects within same program. 49. Development Fund Virement cannot A. Reallocate funds, B. Increase provision, C. Adjust projects, D. Introduce new projects. Correct answer D. It cannot be used to introduce new projects. 50. Application for additional capital provision must include A. Audit report, B. Salary structure, C. Tax record, D. Project cost expenditure provision and balance. Correct answer D. It must 51. Accounting officers must ensure all expenditure reflects A. Political interest, B. Personal discretion, C. Value for money, D. Revenue growth. Correct answer C. All expenditure must reflect economy and value for money principles. 52. The management of expenditure is guided by A. Tax laws only. B. Fiscal Responsibility Act and Procurement Act. C. Audit Act only. D. Budget speech. Correct answer B. It is governed by Fiscal Responsibility Act 2007 and Public Procurement Act 2007. 53. Procurement of goods and services must follow A. Personal judgment. B. Auditor instructions. C. Public procurement thresholds. D. Minister's opinion. Correct answer C. All procurements must comply with approved thresholds. 54. Imprest limits are determined by A. Auditor General. B. National Assembly. C. Budget Office. D. Annual General Imprest Warrant. Correct answer D. Imprest limits are specified in the Annual General Imprest Warrant. 55. Public funds are released by A. Minister of Finance. B. Accountant General. C. Auditor General. D. Budget Office. Correct answer B. The Accountant General releases funds based on warrant or AIE. 56. Responsibility for disbursement of funds rests with A. Auditor General. B. Accountant General. C. National Assembly. D. Accounting Officer. Correct answer D. The accounting officer is responsible for disbursement. 57. Ultimate responsibility for control of votes lies with A. Auditor General. B. Accounting Officer. C. Sub-Accounting Officer. D. Budget Office. Correct answer B. The accounting officer retains full responsibility at all times. 58. Unauthorized disbursement of funds results in A. Warning only. B. No consequence. C. Personal liability. D. Promotion delay. Correct answer C. The officer becomes personally responsible for the amount involved. 59. A departmental vote book is used to A. Record revenue. B. Track expenditure. C. Audit accounts. D. Approve payments. Correct answer B. It is used to monitor receipts and disbursement of funds. 60. Vote book must include all except A. NCOA codes. B. Budget provision. C. Political approval. D. Expenditure incurred. Correct answer C. Political approval is not part of vote book records. 61. Reduction due to virement in vote book is shown in A. Blue ink. B. Black ink. C. Green ink. D. Red ink. Correct answer D. Red ink is used to show reduction from virement. 62. Disbursements must never A. Match receipts. B. Exceed receipts. C. Be recorded. D. Be audited. Correct answer B. Disbursement must not exceed available funds. 63. Payments not appearing in vote book must be A. Ignored. B. Approved. C. Investigated. D. Deleted. Correct answer C. All discrepancies must be investigated immediately. 64. In vote book entries, the amount recorded must be A. Net amount. B. Estimated amount. C. Discounted value. D. Gross amount. Correct answer D. The actual charge gross amount must be recorded. 65. Liabilities must be recorded A. After payment. B. Before approval. C. When incurred. D. At year end. Correct answer C. Liabilities must be recorded immediately they arise. 66. Delegation of expenditure control. A. Transfers responsibility fully. B. Eliminates accountability. C. Requires no approval. D. Does not remove responsibility. Correct answer D. Delegation does not remove the accounting officer's responsibility. 67. A delegatee cannot subdelegate without A. Auditor approval. B. Minister approval. C. Accountant General approval. D. Approval of controlling officer. Correct answer D. Approval from the officer controlling the vote is required. 68. Internal AIE allows officers to A. Audit accounts, B. Collect revenue, C. Incur expenditure internally, D. Approve budget. Correct answer C. It authorizes internal spending by designated officers. 69. Sub-accounting officer must maintain A. Audit register, B. Cash ledger, C. Vote book, D. Memorandum register. Correct answer D. A memorandum register is used to track AIE limits. 70. Monthly returns must include A. Only expenditure, B. Only liabilities, C. Expenditure liabilities and balance, D. Only revenue. Correct answer C. Returns must show expenditure liabilities and balance. Now listen carefully. If you follow this session, you already know one thing. Financial regulations is not something you should take lightly. One mistake can cost you valuable marks, and that's exactly why we created a complete exam mastery pack covering chapters 1 to 5, including a structured ebook and a powerful audio guide you can listen to anytime while resting, traveling, or revising. This is how serious candidates prepare smart, not just hard. Don't leave your success to chance. Go to the description or pinned comments right now, get the full package, and give yourself the advantage most candidates don't have. 71. All vouchers must be stamped. A. Approved, B. Paid, C. Audited, D. Posted into vote book. Correct answer D. Posted into vote book stamp is mandatory. 72. Failure to stamp vouchers indicates A. Audit compliance, B. Proper control, C. Weak control, D. Budget approval. Correct answer C. It reflects weak financial control. 73. Financial irregularities must be A. Ignored, B. Delayed, C. Reported immediately, D. Documented later. Correct answer C. Immediate investigation and reporting is required. 74. If loss of public funds occurs, A. No action is taken, B. Internal memo is written, C. Officer is promoted, D. Action follows financial regulations procedures. Correct answer D. It must be handled in accordance with prescribed procedures. 75. Incorrect certification on voucher leads to A. No consequence, B. Delay in payment, C. Reward, D. Surcharge of officer. Correct answer D. The responsible officer will be surcharged. 76. The officer responsible for certifying vouchers must ensure A. Political approval, B. Accuracy of details, C. Budget increase, D. Revenue generation. Correct answer B. The certifying officer must confirm accuracy of all voucher details. 77. Certification also confirms that A. Taxes are collected, B. Audit is complete, C. Work has been performed, D. Budget is approved. Correct answer C. It ensures that goods and services have been properly delivered or executed. 78. Officers authorized to sign payment vouchers must not be below A. Senior accountant, B. Principal accountant, C. Director, D. Auditor. Correct answer B. Minimum rank required is principal accountant. 79. Specimen signature of authorized officers must be sent to A. Ministry of Finance only, B. National Assembly, C. Internal Audit and Paying Officer, D. Presidency. Correct answer C. It must be forwarded to Internal Audit and Paying Officer for verification. 80. Payment for work must be based on A. Estimated value, B. Future projection, C. Negotiated value, D. Work actually done. Correct answer D. Only certified completed work should be paid for. 81. Deductions from contract payments must be A. Ignored, B. Retained privately, C. Credited to revenue, D. Cancelled. Correct answer C. All deductions must be credited to appropriate revenue lines. 82. Part payment requires A. No documentation, B. Fresh approval and audit certification, C. Minister's speech, D. Budget revision. Correct answer B. It must be supported by fresh approval, records, and audit certification. 83. Expenditure Authority lapses at A. Month end, B. Quarter end, C. Financial year end, D. Audit period. Correct answer C. All warrants lapse at the end of the financial year. 84. Unspent balances must not be A. Reported, B. Recorded, C. Audited, D. Warehoused. Correct answer D. Funds must not be stored or transferred to avoid lapse. 85. Expenditure must be charged to A. Next year account, B. Any available account, C. Current financial year, D. Special account. Correct answer C. Expenses must be recorded in the correct financial year. 86. Inventory must not be drawn A. After approval, B. When needed, C. Before requirement, D. During audit. Correct answer C. Items must not be drawn prematurely to exhaust budget. 87. Funds should not be spent merely because A. Audit is pending, B. They are available, C. They are insufficient, D. They are approved. Correct answer B. Availability of funds does not justify spending. 88. Contractors must be paid when A. Budget is approved, B. Funds are available, C. Work is certified completed, D. Audit is done. Correct answer C. Payment is based on certified completion of work. 89. If funds are insufficient, payments may be A. Cancelled, B. Ignored, C. Deferred permanently, D. Revoted next year. Correct answer D. It may be included in supplementary appropriation next year. 90. Government expenditure is classified into A. Fixed and variable, B. Revenue and capital, C. Recurrent and capital, D. Direct and indirect. Correct answer C. Expenditure is classified into recurrent and capital. 91. Classification of expenditure must follow A. Minister Directive, B. NCOA, C. Auditor's Report, D. Budget Speech. Correct answer B. National Chart of Accounts must be used. 92. Sub-accounting officer must verify all except A. Authorization, B. Supporting documents, C. Personal opinion, D. Proper classification. Correct answer C. Personal opinion is not part of verification requirements. 93. Alteration of voucher classification can only be done by A. Auditor, B. Sub-accounting officer, C. Clerk, D. Officer controlling vote. Correct answer D. Only the controlling officer can authorize changes. 94. Payments must be settled within A. Next financial year, B. Same financial year, C. Audit year, D. Budget cycle. Correct answer B. Payments must be settled within the same financial year. 95. Revolving fund operation requires approval from A. Minister of Finance, B. Accountant General, C. Auditor General, D. Budget Office. Correct answer B. Approval must be obtained from Accountants General. 96. The Minister of Finance has authority over A. Revenue only, B. Audit matters, C. All financial matters, D. Budget speech. Correct answer C. The Minister has full authority over financial and accounting matters. 97. Treasury circulars are issued by A. Minister of Finance, B. Accountants General, C. Auditor General, D. Budget Office. Correct answer B. Accountant General issues treasury circulars and manuals. 98. All MDAs must comply with A. Personal policies, B. Political directives. C. Financial regulations and standards. D. Verbal instructions. Correct answer C. Compliance with regulations and standards is mandatory. 99. Modification of NCOA requires approval from A. Minister. B. Auditor General. C. FAAC. D. Budget Office. Correct answer C. FAAC approves creation or modification of NCOA codes. 100. The financial year for MDAs runs from A. April to March. B. July to June. C. March to February. D. January to December. Correct answer D. Nigeria adopts January 1st to December 31st financial year.